Welcome to the Profit Recovery Podcast with your host, Ben Evans. In this podcast, we delve into the world of profit recovery and explore strategies and techniques to help businesses recover lost profits. Each episode, we bring on a profit recovery expert to share their insights and expertise on a wide range of profit recovery topics. Whether you're a procurement leader, a financial professional, or simply interested in learning more about profit recovery, this podcast is for you. Join us as we explore the nuances of profit recovery, uncover hidden sources of lost revenue, and discover new ways to maximize your profits. From auditing and recovery services to cost-saving measures and revenue optimization strategies, we cover it all on the Profit Recovery Podcast. So sit back, relax, and get ready to recover your profits.
Hi, everyone. Welcome to the second episode of the Profit Recovery Podcast. Today we have a guest that's been a long time coming for me from my perspective. So I joined the recovery audit industry about, just north of 10 years ago. I was a CPA that was working at a big four firm. Coming into the recovery audit industry, going through a master's program in accounting, an undergraduate in accounting, I'd never heard of this concept of actually, going out and finding dollars that were overbilled, overpaid, and recovering them. So when I first ran into the company that I won't name them, that I initially started working at, I felt like I knew nothing, right? So I had a CPA, I knew financial stuff, but I knew nothing about this industry. So what do you do when you know nothing is you either go to Google or you go to Amazon. I Googled some things, but I went to Amazon and I found a book that was called Cost Recovery by an author named Rich Lanza. I went through that book just to get an overview of what our industry is, covering things like accounts payable, but also escheatment and contract compliance and freight. I mean, really running the gamut of all the different services that are offered in this industry. After recording the first episode of the Profit Recovery Podcast, I was like, hey, I'm going to go see if I can find the author. I went on LinkedIn, reached out to Rich, and he was, gracious enough to be willing to do it. So that's how we got where we're at now. I'll let Rich introduce himself, but he is the author of Cost Recovery and many other books, and has a pretty broad and extensive background, which I'll let him dive into. But super excited to have you today, Rich. Can you give us a little bit more background on who you are?
Yeah, absolutely, Ben. And thanks again for having me. It's really a pleasure to be here today. I wanted to go back a little bit in my origin story, to understand how I got to cost recovery and the book. Very similar. I started in Big Four accounting, or at the time it was Big Eight accounting. And just, that book you mentioned, Cost Recovery, is out there. We'll talk about it. I had another one, which is not something you can buy anymore, but let me know if you're interested, folks. But it was called 101 ACL Applications. And it's a big book. It's 638 pages. It came, I'm dating myself, with a 3.5 floppy disk that had all the programs. And it actually gave you 101 ways to audit, like with data analytics and what I kind of realized is that there was a rarity back in the 90s for having someone who had technology skills, but also was a CPA. And I just enjoyed working with data, and I worked with a product that was pretty easy to work with. At the time, we called it computer assisted audit tools. So again, dating myself, they changed it to analytics many years later. And just to give you like a little bit of a perspective, at the time, we used to do audits on site, and we would fly out to a variety of locations. And one year we ended up faxing I'll call them audit results or control findings, to the actual client. And as doing that, the client just immediately, they felt a little bit on edge, and if I didn't say this already, I said we sent it. We actually faxed them out to them. So it was sort of odd, but it was duplicate payments, shipments that weren't billed out, things of that nature. And they wondered, like, did you come on site before we knew you were coming on site, and go through these printed reports that we had, because that's how we audited, was with the printed documents. And in essence, we had been able to kind of download their data, and it led to a much better audit because we could just focus on, these are the things we found. have give the person some time to explain what happened, research it a little bit, and then when we met, we can actually go through how to fix what was identified. So around the same time, I was really fascinated with saving companies money, read books like How to Save Millions at Companies and things like that. And, through kind of some luck, I ended up becoming the cost recovery data analytic person for a cost recovery firm. And by doing that, I realized these firms audit 100% of the data. Usually, when we audited internal audit, it was more sample based and
Yeah.
it was moving to some data based. But the cost recovery firms, it's like every dollar counts. So you really wanted to audit everything there. So very fascinated with saving money, data, and realized there was no reference guide for the industry. So I embarked on a journey of contacting every cost recovery firm I could, just calling them up, saying that I was interested in learning more about their business, how we might be able to work together, and just learning. And from that, the book was born, and many of the chapters actually are written by cost recovery firms. So I'm not an expert in all those areas, but it was great over the years just working with many of them. And now flashing forward to today, yeah, I work at one of the largest accounting tax advisory firms, Grant Thornton, and
Yep.
just all I do now is align the analytics and automations that you could build to everything we're doing, from cost recovery type work, saving companies money, but also just external audit, internal audit, etc.
That's great. I mean, I love the book. So just from the perspective of, like you said, there's really nothing else out there, and I think it's well structured to give someone a good overview. I mean, I think if you're coming in, so when I've had new employees, I started off in the contract compliance world, so a very specific subset of recovery audit that was both focused on non-merchandise, on the retail side or indirect spend, was working more closely with vendors to get the data. But it was important for me to understand what my firm was doing across the gamut, right? It was one of the big recovery firms, it still is, and it was important for me to understand, how do we fit in with this client? And I think having a book to be able to just, summarize all the different services. What's the value proposition? What are some of the hurdles? What are some of the challenges? Why doesn't everybody do this? Some of the questions that initially come into your mind when you first, like, oh, I guess that does make sense. There's an industry, for this. For me, has been very useful. And like I said before, as I've had new employees that come to my teams, I've normally, either purchased or told them to purchase that book and run through it, or handed them a copy of my own. So,
Yeah, and the
I'm glad you
contract.
did it. I think, yeah,
Yeah, sorry to interrupt. I mean, the contract auditing you're talking about is essentially, I find cost recovery a lot of times starts with like a payables type audit where you're getting all
yep,
the payables data, looking at it. But then from that, you're doing a supplier risk analysis to realize these are
exactly.
companies that, we spend a lot of money with. We have a audit clause. We might as well go take a look at them. And over the years, I think contract auditors ended up realizing, hey, I can be a lease recovery auditor because I do contract audits of leases, or fax
Yes.
machine, not copy machines is a whole cost recovery area, etc.
No, it's spot on. And I think that kind of leads in. So obviously, prior to recording this episode, Rich and I circled up and said, okay, because I'm sure you'll be a repeat guest, what topic do we want to cover today? And what do we want to go through? And I'll let Rich jump in to kind of the background to it, but I really like what you came up with. Right. And what I understand, and correct me after I say this incorrectly, is, how can we be using data analytics better to, at the beginning of an audit, to determine where we go? How can we map out what an audit should look like using the data and using big data and analytics principles? Because as Rich has said, like, this is where he started, right? Like, he was, you were faxing results to someone. They were surprised that, how could you have results? You haven't been on site. It's cool. Look, I'm using the data remotely. Um, you know, you've been in this world for a long time. I think this is definitely an area where I've seen people, professional in the industry, can be lacking. To your point, I think very often you'll see people that just audit everything all the same, which it has its place in certain areas, but if we can be more intelligent, if we can be more strategic, intelligence is the wrong word. If we can be more strategic using the data to tell us where to go, we can have a more efficient audit, which can have better results financially, create less friction, right? Because a lot of this
Yeah.
is, I was just talking in a call earlier today with a potential client. A lot of this is about avoiding friction. Like if we're gonna go to an area, spend a bunch of time and get feedback from the client and talk to suppliers, only to come up with little or no real result, we burn some political capital
Mhm.
within that organization and its suppliers. And so again, I don't want to. I'm kind of jumping ahead what Rick's going to say here. Rich is going to say here, but I think it's such an important topic. So I'm trying to kind of highlight, if we can be more efficient about being strategic with this data, like Rich is going to kind of outline some of these principles, it can drastically affect how good we are as professionals. It can make us much more, efficient, have a better product, a better user experience for our clients, for those who are in consulting firms, for those of you who listen to this podcast who are at clients, or at owner companies. Um, Same concept. If you can be more strategic using data analytics to decide where to go, you're going to be in a better spot to reduce friction and have a more effective audit. So with that, I'll let
Yeah,
Rich. I'd love you to just kind of do more of an intro. This this
sure.
this idea kind of came 100% from Rich, coming from his background. So take it away.
Yeah, thanks. And yeah, I mean, really playing off of what you said there, that friction word. In my 3 decades doing this, I have continued to see friction, and it's when we go into it's understandable though. People commit errors, people commit fraud too, and it's not the computer that's doing it on many ways. But I understand why everyone is a bit time bankrupt these days. It's why cost recovery firms, continue because and contract auditors such is that you really are providing a service to because people just don't have that time. But because they're time bankrupt that way, do they really want to have more issues show up? Like if we analyze all the data and find a lot, potentially of concern to look at, it's like, oh gosh, I already had a full plate of things to do this year. Now you're adding on 5 new things, to do. May not be the best thing that they want to have happen. And many times that's, what a recovery firm unfortunately will uncover some things and it leads to more discussion and analysis. But it also can really help the organization. And I think that's, definitely try to get to a story here that speaks to that. But I do feel that most companies will also have this qualitative feel that everything's okay. We've been running this process for the last 20 years this way. It seems to work well, but they've really never looked at the data to validate that in any way. And one example, that I can think of is my largest data recovery, or sorry, cost recovery from data, was I went to a company. Everyone was telling me that payments using, from treasury and accounts payable is what concerned them, but they couldn't put their finger on it exactly. Like I went around and it was, within the first couple of weeks being there, I'm just interviewing everyone as an internal auditor. What are you finding within this payables process? And everyone just kept landing on treasury AP. And it wasn't like they knew exactly what the problem was, and they were just afraid to tell me. It was more literally they just never quantified it. So I didn't, I didn't know much about the company. It was sort of, first time there, and anyone can do this. So this is a great, test that you can run yourself. You take your open payables and you take all of the positive values in the open payable, which in many ways is like the invoices in that case. I'll call that the positive values in an AP aging, and then take all the negative values and age them separately. So normally we net it all together. And what this company, was
Okay.
doing was they said, yeah, everything over 180 days from this printed report, mind you, everything there is netting out to like $4 million. So that was good for them. That wasn't a very high number for them. And but when we looked at it, it really was $136 million of payables, positive numbers, and then 132 million of negative or receivable balances from vendors. So, again, I know we're kind of creating work for people when we say, uh-oh, we think we just found $132 million of old over 180-day receivables that you need to go collect on. No one wants to
Turned
hear
$4
that,
million
right?
dollars into 136 plus pretty
Exactly.
quickly, right?
But for the company, it ended up, yeah, okay, there's a little bit of call it denial, followed by anger, followed by, there's a little bit of that going on. But at the end of it, we ended up with a better process. They ended up getting more technology dollars to not only look into why payments were being made on wires in Treasury, but also then paying the invoices. But we ended up implementing a three-way matching system that made life a lot easier for everyone, and we added a few more people. So they ended up at net. There's that initial phase of realization, but then after that, it was all just gravy of and kind of leading to a scenario where they were in a much better position, but also just happier workers, at the end of the day. So it was worthwhile not only in saving the money, but also just making life better for everybody in the department.
Yeah, that's a good segue, I think. So, um, well, I mean, tell me more about this concept of. I mean, and again, we've had a discussion, and I have to kind of acknowledge that because otherwise, it just seems like a naturally leading question. But this
Yeah.
concept of using analytics. I mean, so in your role now, I imagine you're not just recovery audit anymore. You're at Grant Thornton. You're supporting audit work of different types, but in some ways it's different. In some ways, it's all audit work. Why? I mean, why? What's the sales pitch? Which what's the sales pitch for doing analytics up front? For putting the work in at the beginning as opposed to just kind of diving in and going where you go and following a set plan.
Yeah, it's a great point. Like, so many audits, be it a external audit of your financial statements or a process review or a cost recovery review, it will start with what I was doing, interviewing, flow charting, a lot of this, like I'll call it qualitative type analysis that's done, where you're using interview type evidence and maybe looking at walkthroughs of an invoice through a system to kind of guide what the ending audit uh, procedures that would come out of that. So it's kind of guiding that, but it's all documenting what's happening right now. And what's great about the quantification of it all is that through analytics, and we'll talk about this in a little bit, but you can use this like deductive approach and inductive approach to really understand the and you could do it without even talking to anyone. It's similar to maybe getting a panel of your vital statistics and trying to understand. Again, a doctor could look at that and pretty much tell you, like, okay, I think you need to do this in your diet and your exercise plan, etc. And they don't even need to meet you. They don't need to hit a little hammer on your knee to figure it out. And I feel like the data don't lie. I mean, and not that people do, but I think people again fall into that confirmation bias of just everything's okay here. And the data allows you to see what you don't know about the process. So, I would talk to a variety of people in the process chain, but since sometimes they're not all talking together, it you would miss some of these gaps. So the data also helps there as well.
Great, great. And going back to our discussions earlier, what are some of the obstacles, right? Like, so what keeps us from being able to do this at the beginning of it, and what are some of
Yeah,
the common obstacles that you see?
I do think it's probably the just that initial friction of that this is going to be a deeper review than having those interviews and flipping through reports and talking to people. We are going to need to pull data. So many things that have happened over the years is we've built things like scripts that will pull out data from a variety of ERP packages, so it makes it easier, for the client. And I think, generally most cost recovery other firms have just gotten better at those ERP systems. They know, I don't want to name names or such, but go to that reporting module of that ERP system, and you can just highlight the fields that you want and get the data out. But that is an obstacle because if you're talking to somebody in finance, they need to call IT. And again, nothing wrong with IT, but they're time bankrupt too. They have a
Very
lot of
much.
projects to work on. And when you show up and say, we need to download the entire history of payments and purchase orders and vendors and such, they go, ooh, is this a priority? Can I do this in 6 months? So anything you can do to make that easier on IT is, welcomed as well. And yeah, I think those might be the two top ones, at least that I've seen, is just getting over the I keep getting back to the people aspect of this, trying to make them comfortable that what we're doing here is only going to highlight things that will hopefully make your day better at the end of the day.
Yeah. No, and honestly, as you're talking through that's true, right? I mean that if I have a main contact and I go from as a consulting individual who's working with clients, if I have a main contact, we've sold them on the idea that they're the champion, they're the recovery audit, person at that organization, and I say, hey, we want to hold a bunch of interviews. There's not gonna be a huge amount of pushback. If I say, hey, I need this and that and this export from these systems, it's like, oh, hey, whoa, do we really need to do all that this early? Let's see if we find some stuff, or let's see where whatever else. And I think I get that. Like it's human nature, right? Like to say, okay, that's a bigger ask. We're now, as you use the analogy, we're now pulling blood panels as a doctor, as opposed to just, knocking your knee with a hammer. But um, it's worth it. I mean, I think we're saying for a significant project,
Yeah.
if we can be educated on the systems and be efficient about how to pull that, while that is a big ask initially, we're going to have a lot less bugging people who don't need to be bugged, because we're able to be more strategic and precise about where we're doing our work and where we're not doing our work. So I think an education process from an outside consultant's perspective, and I think it still applies for an internal, someone that like company like Walmart. We had Jason Henbest on the episode last week, right? So for someone like Jason Henbest, I think it applies for his as well. While you might have that initial pushback on pulling that data, um, if you can be strategic about how you're communicating, we need to do this. You can probably be in a better spot where there's less friction, there's less effort for the people that are kind of putting their hands up and saying this is difficult, um, over the long run. Is that
Yeah.
is that a fair?
Yeah, I think there's less to pull. Normally we would come back and people would have to pull invoices, etc. Whereas much of that information is usually in the data itself. I mean, paper invoices are, starting to become even or at least PDFs now, as opposed to being on paper. Again, I'm dating myself, but it's coming down to the data is really where it all is. So if we could pull all that data, we don't have to have you end up pulling a lot of the actual supporting documentation. And the other one is it helps sell the story. And I think that was the point I was trying to make there, was that it really quantifies the problem really well, so that you can do that risk assessment much better. You can identify, we don't need to do, let's say, contract audits of 10 areas this year. We could focus on these three, and that's going to give us like 80% of the benefit. And furthermore, those three are, they're kind of a little bit on fire right now. And we really need to
Yeah.
prioritize yeah, put the people, process, technology to it, because yeah, with all the priorities, I keep going back to the time bankruptcy in our business world today. You really need to sell your story, so data helps you sell that story.
No, I like that. Yeah, and using contract audit as an example, I mean, knowing which audits to take off during that year, even when we perform contract audits and we're working with the supplier, one of the first things we're wanting to get from them is a line item billing detail report, something that's exported directly out of their financial system, as opposed to getting, a sample of invoices, starting to gather documentation. We want to get that line item billing detail report along with the contracts initially so that we can do exactly what you're saying. Hey, let's look and see, what we can just see in the larger data, like what trends and patterns can we see in the larger data. And that might guide how we start requesting more detailed documentation and how we can be more precise and less kind of onerous in doing that. So,
Yeah,
okay.
and
So go
it
ahead.
may make sense to talk about this deductive inductive approach. Like I can give a few examples there
Yeah, let's
as
jump
well
in there. Like
of
what do you
how
mean
it.
by deductive and inductive? Because yeah, go ahead.
Yeah, and it's something a professor listened to what I was talking about, a lot of, the work that I'd been doing. And I will admit I was more into the trees on it, really working with it. And the professor looked at it from a forest kind of view and said, so an example would be, we can run reports like payments that are made on a weekend, and I don't like to use the F word too much, the fraud word, because
Yeah,
that also, if you want to create some friction in an organization, just say we're here to find fraud. That's not why we're here, generally speaking. But if you trip over it, that is one. But one way is weekend payments. People coming in on a weekend to avoid anyone looking at them, doing it at night. So running like at night type reporting. Um, Round dollar payments can be another one that's just odd. In that wire payment discussion that we had before, that example, that was what was happening. We were running behind on paying our vendors, and they were about to shut us off. So we said, "Uh-oh, send them 10 million," like keep them happy. But then no one
yeah,
would go back to reconcile the 10 million. So it's not that the round dollar payment or the weekend payment, a lot of people work weekends, are fraudulent, or it's kind of, but it shows some potential oddness in the process. That so but on the deductive side, we came up with these reports like that over the years. The number of in sequence invoice numbers, so the invoice numbers in perfect sequence, it's just odd. It could mean that somebody fabricated those. It could also mean that you're working with a vendor that doesn't have a lot of other clients. You're the only client, and from a supplier risk point of view, if they are supporting a pretty major part of your organization, you may want to get another supplier, just to make
yeah.
sure you're covered. Um, but again, all of these reports are not an issue, but they are more deductive in that over the years we identified these reports as like symptomatic of problems. Going to the trending point, I'll explain inductive, with some examples too. But the deductive side of it, what I find is that a lot of people like to go to benchmarks. So they may go to a company that is or an association that has benchmarks on, number of manual versus automated invoices that we're processing through our system, and it should be whatever 80% automated or something. Um, those kind of benchmarks, people have called, fast food. They're initially satisfying, but then they lead to no lasting benefit, because people will look at it and then start saying, well, we're different from those companies. We have a different process, different set of vendors. We have to be, a bit different. But trending the report to themselves can be very valuable. So even with that deductive approach, if you trend that over time, you can start to, really get an understanding that, yeah, we work weekends, but in, call it the summer of 2023, we went up by 20% in that time frame. We might want to look at that time frame a little bit more in a more focused way, because it might highlight that we had more processing errors during that time. People were just simply working later. You can actually start looking at when invoices are being input and start getting a real picture, using that deductive approach of that report that you think is kind of problematic, and then trending it over time. Does that make sense?
Makes a ton of sense. So, I mean, the way I'm hearing it, to frame it a different way would be, instead of benchmarking, the fast food version against someone else or an industry, benchmark against yourself over time, seeing, how
Exactly.
because it makes, they say the same thing when you start going to the gym, right? Like, instead of paying attention to someone else, what they're doing, make sure that you're doing better every single day. Right. But I think
Exactly.
in this case, you're talking about finding fraud and exceptions, but still it's going to stick out, right? Hey, normally we act this way. And so when we see something that doesn't act this way, we should ask some follow-up questions. We should do some digging, where it's very easy to dismiss, well, the industry does this. Well, we're different than the industry. That's a conglomeration of a bunch of different people, right? A bunch of
Right.
different organizations. But when it's you, it's like, hey, Ben always does this. He always, gets a Big Mac on Fridays. When we suddenly see transaction that shows that I'm eating at Subway, something's going on. Like,
Right.
because that guy eats Big Macs on Fridays, right?
Yeah, and maybe I'll jump over to the inductive approach because that even plays more into the trending better. And so the deductive is more like looking down with ideas about reports that you think are going to be problems or create more processing errors or fraud in your process flow. But from an inductive approach, you could just look even at like supplier values and volumes over time. Like that's the most simple one. But also looking at people that are entering the invoices, looking at their volumes and values over time. It's a kind of a simple approach. And I'll go like more, and that other example I had before of the aging of the positive values and negative values in the AP aging. Again, I was really just trying to understand what I was looking at and kind of inducing that up from the data as opposed to, making assumptions and saying, I'm going to look for every duplicate payment where, the vendor, the invoice, and the date are the same, because that based on past work, my hypothesis is that we'll find a duplicate payment. It was more even just potentially bubbling up from the data itself. A couple more examples that get a little bit deeper here is taking a look at enters that work with a given vendor or with a given area of spend. A lot of times companies do that. We'll have a certain processor for all of the fuel bills or all of the maintenance parts, and then looking for the 1% of time that somebody else did their job, and it could be a vacation, like people need
Yeah.
time off. Uh, but it could be a lot of other things. And you could use that like outlier type analysis as well for everything. I mean, you could almost say, this supplier works in this or is purchased by this department a lot, but then this one time they posted to this other department. And yeah, and there's probably, again, 100 examples we can give, but I think the person entering it and approving it too tends to be the one that can highlight something you might want to go look into.
No, I like that. So if I understand, kind of the way you're using inductive and deductive, inductive, you're basically saying, hey, let the data tell you what's happening, what bubbles up. I think is a term that you use from the data. Where
Right.
deductive is kind of coming into it with a hypothesis, right? Like, I'm looking for this, and this is what that looks like, and I'm going to go find that. Where inductive is
Correct.
just dig into the data, like that $4 million example you used. You were just kind of saying, well, what is that 4 million? What's it made of? What are the components of it? And as you started to look at that, the issues presented themselves. You didn't go looking for a specific issue. Is that a good understanding of kind of how
It
you're using
is.
that?
Yeah,
Okay,
and I really feel you need both because you never know which
of
one is going to
course.
hit. Yeah, in
Yeah,
the
and you'll have questions,
analysis.
right? Clients, you'll. Again, coming from a consulting side, clients will say, "Well, we have concerns about this specific type of issue. Did you see anything in there?"
Right.
And in those cases, yeah, we need deductive approaches to be able to say, "Yeah, we did look. We did gather this type of data. We did these types of tests. We did these type of procedures to ensure that that's not happening." But I love the open mindedness of just saying, "Hey, we also need to pull back from that and say, well, what is happening? Like what is the data telling us? Because there might be things that there's a lot of things that fall into certain buckets. We're going to see certain types of duplicate payments, and we all could sub bucket those duplicate payments into different categories of things that happen. P cards and also gets paid out of the main system, gets paid at a site, but also at corporate. I mean, there's a lot of different ways that those things can happen. But how often are we missing something that's unique? That's not but could be very significant because we don't kind of let the data tell the story.
And trending it by vendor helps, like I know going deep on the duplicate payment example, because it is a very common area for folks to look
Yeah,
into,
it
is
is.
just
Yeah,
doing it by supplier. There are suppliers out there, I won't name them, but that tend to have the same amount charged over and over and over again. And if you initially ran your due pay report, it's going to flag it, right? But over
yeah,
time, you start to, de-risk them, in your analysis and say, maybe we'll look at something that is a large dollar amount that's outside of the amount that they're constantly charging us. Um, but it's a way of trending it. And you touched on something I did want to mention, kind of gets to the longer term baselining a company against themselves is really every company is unique in why they have duplicate payments and other overpayments. And if there is a way to track that in some way as you're going through it, I always think the duplicate payment example is the best one. Statement credits with a vendor is another one. Just tracking, like, how did we get here?
yeah,
Um, is a way to also track over time. Are we getting better? And an example might be we instituted a new invoice uh, uh, pattern that we should, whenever we enter a date, it's entered year, dash, month, dash, y. And that way it allows us to make sure that we don't enter dates differently so that when the system looks at that invoice number, it doesn't flag it anymore because it sees it as two different dates. Putting words before the dates, so as long as you can come up with like an approach there and everyone follows it, you have a much better shot of not paying the due pay, but then tracking that and saying, person entered invoice number differently. That would be something that's useful to track.
that kind of takes that next step. Okay. And I've got kind of notes that from our past discussion here, but I know we talked a little bit about Benford's law and even some of the applications that you were
Yeah.
kind of experimenting with on text and things like that.
Yep.
And I'd love to, if you want to dive into that, that's great. I mean, what are some other things you're seeing? I mean, what are other types of analytics approaches that you're taking and seeing kind of a unique value from these days?
Yeah, let's, I'll kind of give you an inductive and then a deductive one. I think right now I'm noticing a lot of the companies we're talking about in the payables procure to pay area, they are looking for cash. I mean, overpayments, trying to kind of, grab back any money that they can at this stage is helping them. Uh, I don't know if everybody's as flush with cash. Interest rates are higher, so but I think this is an evergreen thing to do. This is why it's always like a good idea to have these kind of work being done. But yeah, obviously, kind of running reports around duplicate payments, maybe taking a look at if the average payment to that vendor is a certain amount, looking for ones that are far above that average to that vendor, and just seeing, did somebody kind of finger the and forget and add a different integer to that number by
Yeah,
mistake, so it ended up being one more zero at the end of it. But days payable outstanding, like calculating for each vendor, what is your average DPO? And a lot of systems will manage this from a terms management point of view, but there are exceptions to that all the time. People can enter in a rush payment or just I'm actually uncertain why it happens as much, other than I think many times people want to clear their desk off and just sort of have the payments go out, or they don't have that terms management type system that's built, and the payments just go out. From an inductive one, I'll give you kind of a fun example here. There is something called Benford's law where it will look at like the first couple of digits of a number, and you can summarize all of the values in a population by that. So it's odd. Like normally you would say, let's summarize by amount, which again is another useful thing to do. Just summarize by amount, have all your amounts in like a big pivot table of amounts, and look at the volumes by quarter, and just look at how that is trending. You'd be surprised how level that can be, and especially when you bring it down to the first two digits of numbers, that leveling happens even more. And if you go down to the first digit of number, that I believe that's where Benford's law really plays into it. um, that it's almost eerie how well everything lines up to Benford's law, where one is like 30 something percent of numbers, the number two is the start of a number is like 19%, et cetera. And you would say that there's no way this could happen. But when you have a random population like AP data, and when I say random, some of it like rent payments are not random, it's the same
Sure.
amount. But
Yeah,
when
yeah.
you look across, it becomes more randomized. It's eerie how it plays in. But we found it's almost better to look at that across companies as opposed to Benford's law itself, like within the company. So you can just say, this was our trend of our digit patterns, like the amounts. Let's kind of do that as well for that by quarter and see how things are changing. It can highlight things like duplicate payments and overpayments and just new trends that you didn't realize of things you're purchasing over time.
And so it's been a minute since I've learned about Benford's law. Actually, it was about 5, 6 years ago. We were doing an analytics training with a software tool. So if I understand Benford's law at a high level, what we're saying is, hey, there's a normal distribution that we would expect for the first digit of any number, right?
About
And so
30%. Yeah,
yeah,
number
normal
one is
normal
like
for
30.
ones,
Yep,
normal for
yep,
twos, threes,
yep.
and so we kind of have a distribution chart. Say this is normal, and when we see things that are outside of that norm, we have concerns, right? I think Benford law is used quite a bit in fraud. It's used quite a bit, to look for, hey, this isn't how things normally behave, and I think I think just to kind of follow up on what you're saying, um, you're saying, hey, Benford's law, it lines up really well. Like it's going to say 30% ones, 20%, whatever it is, right? But even more effective would be to say, okay, well, let's just look at historically what's our
Right,
distribution, right?
right.
So
Yep.
historically, how often are payments or invoices or both or whatever activity coming in with a leading 1, 2, 3, 4, 5, 6, 7, 8, or 9 digit. And when we start to see significant changes than what's historically happened, let's investigate, right? And I guess that would be kind of inductive, right? Like we're saying, hey, when if we're seeing something out of the norm,
Yep.
I don't have a hypothesis of what it is. Like I
Exactly.
just know something's not normal,
Right.
and there could be a totally innocuous cause for that. And if that's the case, great. I want to understand it, or it could be something else, and I'm going to dig in and find out what it is. Is that a
Yeah,
fair?
it's a very fair analysis. Yeah,
Okay.
and flipping it over to words. So the interesting thing is they've all taught us in school. I was trained as an accountant, and I guess I suppose you were as well, Ben. And many of us probably on the call have more of that accounting background, finance background. They always told us follow the money, follow the numbers. And when you look at a data set, especially when you really look at a P2P data set and you analyze it, there's actually a lot more text in there than you would ever realize, be it line notes and the description field for an invoice where they may type in some
Yeah.
notes about it,
Service
or
descriptions. Yeah.
travel expenses, etc. Those fields can be 500 characters long, where they're typing, whereas like the amount field is like 16 characters long, wide. And so you'd be amazed to say or to learn that when you look at text versus number data in the world, it's like 80% text is the analysis done. And even when you look at AP data, you'd be surprised to see it, or to think it, but it ends up becoming around at least 60% of the data. However, most of us never look at that and analyze that data. But I'll give you an example here, and I think it probably relates. In my example, it's more emails that we're analyzing, and I'm not sure. If is it common in contract auditing for procurement type employees to get some of their emails? In my case, the legal team reached out to us. This is one of these fraud ones where there was suspicion of some playing games with vendors with procurement. So we were able to get their email box and look at it. But I think there are
Yeah, we
some
do quite a
companies
bit.
out
We do
there.
quite a bit
Yeah,
of email auditing. More on the
interesting.
actually the retail accounts payable side is probably the most common spot where we're looking at deals that are
Yeah,
negotiated between buyers and vendors, and promotions and things like that. So
yeah,
obviously there's some controls there, but I'd say more of our retail, more of our large retail clients on the AP side than not, we actually gather email data, and we have a tool that we're mining and doing OCR, and we've
great.
got a whole situation there. So yeah, it's definitely applicable. But go on.
No, it's great. It's great to hear in a way, and I'm not trying to, open us up to Big Brother or something like that here. It's more when you can analyze that type of data, you can find more trends
Yeah.
in that text data than anywhere. Again, dating myself, but we used to allow the recovery auditors into the procurement managers' offices. They'd watch them, but they would actually go through and find all the post-it notes because a lot of these deals at the time were like written down on post-it notes and never made it into the system. But anyway, but
I bet
but
that was an effective approach.
I
The
bet it
post-it
was.
note. I mean,
It
I'd be,
was.
I'd be if I could turn this camera around, you might find a few
Yeah,
post-it
exactly. And
notes that were material for me.
exactly. And I mean, it you understand it. The more we get into business, it just we're all time bankrupt. We don't have time to enter them all in. But going down the text analytic approach, I looked at Benford's law, digital, what they call also digital analysis, because you're looking at that, and it's almost like an atomic way of looking at the data. Like if a number is more of a number, this is going atomic on it, and looking at the digits. Going atomic on the words, you can look at the first two letters or the last two letters, and you'd be surprised. I've done things like my own emails where I've looked at it over time and realized that at certain times my word usage would change. And kind of relating that to this, where we got the email boxes of 5 procurement managers, and it was at a organization that was suspected some fraud, but couldn't, they got a whistleblower tip, and that's many times how something is found. But they do need to find evidence. So we analyze the data, and even though it kind of relates back to my emails, my last name is Lanza, so ZA is the last 2 digits or characters. But that's not common. I mean, to have ZA as the
Yeah, it's
last
not a
2
common
characters
last
of a
name. Yeah.
word. Yeah. So in out of the 5, 3 of them had pizza. So the ZA was very high on their last 2 letters, and they had the word pizza in there. So uh, they were constantly talking about we need to go to California Pizza and go eat, and they went down that. We analyzed this, and it was almost something where weekly they were doing this. And maybe that's not odd, but what we found odd was that word was never used by anybody else. So it was kind of
So these
and
guys
it
were either
is.
like the biggest proponents of California Pizza Kitchen,
There you go. Yeah, I
or
almost
there's
didn't want to say
something
it, but yeah,
something else
yeah.
going on.
Exactly. So what was happening, and with that, call it thread, they ended up interviewing the 3, and they said, we know about the California Pizza Kitchen. And in that case, one of the three broke down in the interview and explained how they were collecting money from a vendor to kind of work a deal with them. And it ended up opening up the other two to it. But it all started with the data analytics that drove that finding. Now that again going down that fraud route, but I think just understanding purchasing patterns, understanding what new things that companies are buying that they weren't buying in the past, and just in some comforting way too, by looking at the digital, the textual analytics, some of the other trending, at least an organization can also report back to their higher ups in the organization that things are generally placid in this, that we don't, not everywhere needs concern. And we don't
Yeah.
have to also, back to some of the things you noted, we can use the data to really drive some of those contract audits or some of the other focus areas within the organization. And when someone says, well, how'd you get to this? You could at least show data that would support why you're going down that line of questioning or, deciding to prioritize things.
I like that a lot. I like that a lot. So well, I know we're running pretty close on time. I kind of I have a note here kind of on conclusion. I wanted to ask you about an analogy on the car's computer diagnostic. So you kind of discussed an analogy when we were talking before. So in closing, I think it's a good one to kind of frame up, but
Yeah.
kind of walk through that analogy if you don't mind the
Yeah,
diagnostic
and I'll
of the car
and I'll
computer.
try to tie in something else to it. But yeah, so we all bring our car in for a review every now and then, be it at each oil change, and folks will do a 10-point inspection of the car, and kind of, kick in the tires, so to speak, and through that they will find things that they need to definitely change. But I think most of it, if you really ask the technician, that they're kind of coming to is uh, tapping into that computer. Many of you can buy this tool online these days and you can like do it yourself for your own car. What's nice about that is not only does it give you some of the codes that are coming up, but it can give you more of like a trending over time of how many times that code's coming up over the last, say, 3 months since the last oil change. And it just gives you a more fuller picture of what's happening versus a car that doesn't have a computer on it. I'm really dating myself, but an older antique type car that you pretty much are having to inspect everything or, take everything apart manually to get into it. The computer data gives you an ability to kind of very quickly, as quickly as kind of taking two prongs and putting it onto the computer, understanding what's in there. So one thing to note here is that maybe don't rely on just one report either or one analysis to drive it, drive your conclusion around risk. One of the things that we'll do is we actually build models of scoring for things like cost recovery or transforming the financial process itself. And we'll take all those report ideas, some of the ones I've mentioned, and some of the inductive analysis and just put it into a scoring model and say, each report gets 5%, let's say, and there's 20 reports, and score every vendor. And from
Yep.
that, you'd be surprised how accurate that can be in
Yeah.
identifying vendors that, when they have all of these flags or symptoms, it kind of goes back to the car or the blood panel analogy that there is something really wrong, with those suppliers versus everyone else that doesn't have that sort of diagnostic.
I love it. I'm definitely, after this discussion, I'm definitely going to try to look into this text-based Benfords. Like I said, we use quite a bit of analytics on emails and reviews. I'd be interested to see, using that approach because I believe you. Like, I mean, it makes sense, but it also doesn't seem logical. I mean, like it seems like I can't believe it, but at the same time, I mean, if I've seen Benfords, like we did some
hmm
tests to kind of prove it out. It is weird. It's creepy when you see how well it actually follows it. I'm interested to see how that works on the data on the non numerical data, but the actual text based data. So
Yeah. And just summarizing,
Yeah,
if you have some tools to be able to summarize those words, all you have to do is strip it down to those first and, two
first couple
letters,
digits.
first letter. Yeah,
The za, you
exactly.
got to find the za, right?
Yeah,
Well, I'm definitely going to want to get. So the other thing, the other discussion I want to have with you in the future is around kind of the sales pitch for, because I really like that in your book, right? Like kind of what's the sales pitch? What's the value proposition of recovery audit? So I want to table that for our next discussion. If not the next one, then the one after that, because I do really like the way that you've kind of summarized that within the book. You know, I've used a lot of those principles as I've kind of talked to
good,
people at
good.
conferences and conventions. But that's for another day. But really, Rich, really appreciate your time today. I think I think in general this is the right way to approach things and to think of things at the beginning of audits. How can we use large data analytics, whether you're a recovery auditor or you somehow fell across this podcast and you're just in the general world of audit, how can we use that to determine where we're going to look, and how can we, in addition to using a deductive, which I think is kind of more natural for us, how can we use inductive approaches to kind of let issues, the term you use is bubble up, as we as we perform our reviews. I think that's really the kind of the takeaway from my perspective on what I'd hope someone get out of this is, looking at the process you're doing, how can we do more up front? How can I do more data analytics up front? And how can I have a more broad approach on data analytics to be able to deliver a better audit, to perform my work and become a better professional. So yeah, I like
Thank you
it.
very much. Yeah, no, I agreed. I think it helps every step of the process, the planning, the execution, talking to the client afterwards and giving those metrics at the end of it all. It's a real differentiator
Yeah,
and it was a differentiator back in the early 90s when I was doing it. And I think it's still a differentiator today.
I think it's becoming. I
Because,
mean, it's becoming more effective. More data is being captured, right? I mean, and
yeah,
more data is being captured. I mean, so um, yeah, I mean, data analytics is obviously a buzzword, but it sounds like you were kind of keyed in on it well before it was a buzzword, before it even existed. I mean, it was computer assisted audit
tools. Yes, it
tools,
was
right? Yeah,
CATS. We called it
yeah.
CATS at the
So
time. And yep.
yeah, you were into it before it was cool. So
Exactly.
awesome, Rich. Well, hey, I appreciate the time
Thank you.
and look forward to having you on as a guest in the future.
Great. Thanks so
Bye.
much. Thanks, Ben.